Happy Friday, everybody. This is Joe Cusick from the Cusick Group. Stocks slipped early. We were basically waiting for that jobs report, and most of the participants, when we saw the initial numbers, they were about in line with what expectations were, and the market actually rallied. As pundits started to look at the numbers, they were a little bit disappointed. You saw that there was a slight uptick in the number and a downtick in the number of jobs that were actually out there that were being created. But what it did do is give us some transparency into what the Federal Reserve might be looking at. And really, these numbers have put a rate hike in December at higher probability. So we're going to look at the long-term rates today, and the Fed funds complex is behind us. But the relative weakness, though, from the get-go really hit in areas like the heavily weighted industrials. They were down as much as 1.5% today. You also saw that the NASDAQ, the S&Ps, and the Dow Jones were down at their lowest levels, down about almost a little bit over 0.5%. They basically legged back up and are going to close the day, just slightly in the red. Now, you clearly saw, though, that the pit behind me, the Fed Fund futures pits, they were discounting right now any type of possible rate move into November, but they were also increasing the probability of a rate hike in December. It's now up from 63% to almost 66% that we're going to have a hike into that 50 to 75 basis point level. One thing that's notable too is that economically sensitive sector, the transports, they really took it on the chin early today. They tried to crawl back, but the transports were down as much as 1.3% today. And really where I saw some weakness was in the airline sector. They really narrowed their early weekly advance, and they basically declined by about 1.3%, which is telling you that maybe there could be some jeopardy in some of those transport names that have been very hot as of late. Also in the economically sensitive financial sector, we've been talking about rates. Financials are something that you want to keep an eye on. They were down about 0.4%, so basically flat. But we wanted to really watch the property and casualty names, especially now that Hurricane Matthew is now hitting landfall in Florida. And as a matter of fact, what we saw in this subgroup of the casualty segment, you saw that names like Travelers, as well as a few other of the names in there, they actually were rising today as we started to see the fallout from the storm. Now, while there still is significant potential damage that could occur right now, the pullback has been reduced, and you're starting to see that there was actually some buyers in some of these names. The last thing that I want to talk about is the Treasury yields, and specifically I want to talk about the curve between the curve on the 2-year and the 10-year. The 2-year note was trading right around about 0.8% on the yield, and the 10-year note got as high as about 1.74% on the yield as well. Now, what I did see was that curve is actually steepening from 83 basis points that we saw last Friday when I talked to you to about 89 basis points. So we want to keep an eye on that going into next week. Next week, by the way, one of the catalysts that we could see for some market volatility, which came in dramatically today towards the close of business, really after the last hour of trading, is going to be the FOMC meeting minutes. And we're also going to watch that going to be entertaining debate on Sunday. So with that being said, plenty of homework to do over the weekend. And for those of you that are in Florida or on the East Coast with Matthew, best of luck with that. Our fingers are crossed that hopefully knowing that we don't have any loss of life on that. So with that being said, we'll talk to you next week, and take care, everybody.